FM this time. So as you might already notice, we're evolving, we're getting grower, and actually it was about time after 12 years of rapid growth, becoming a truly global broker of choice with more than 3.5 million live accounts open, we have decided that it's time to enter a new era. And this new era, as you already noticed, is under the name of HFM. So nothing really changed, just to clarify. I haven't clarified yesterday in my Instagram live. I'm going to clarify it today. Nothing changed other than the fact that we are growing and we do this in order to provide even more products to our clients. So, new era for us, HFM, that is actually having the same values, having the same honesty, and doing our best to provide you the best trading experience we can. So nothing to be scared about. It's just us getting bigger, and actually it will be an opportunity for us to provide you with extra assets for that you can consider in your as investors. So we currently provide more than 1,200 products in 9 asset class, and we having forex in our name, so it was no longer a proper reflection of the award-winning trading experience we offer. So there will be no corporate changes or impact to you, or any problems with the trading platform accesses, and we will remain commitment to our core values: honesty, openness, and transparency, as I keep saying. So, and once again, I'm not sure how many of you have actually seen our videos, but we will be very, very glad to announce. I'm very glad, actually. I have announced it also yesterday, but I'm announcing it again. I'm very proud to announce that very soon we will be releasing a brand new trading app that will allow our traders to trade on the go, as well as physical stocks. So that was in regards to the new era from our company and the name of the change. But I can see it, that I keep seeing that you are commenting and you're doing very well, because it's a very, very important day. Actually, in less than 5 minutes from now, we have we have Bank of England, right? So, okay, there's a lot of spamming over here. So this is where we should focus on. How are you? I'm great, thank you. I'm great. So let's check a bit the charts together, just to see, just to let you know what's going on, what we're expecting in less than 3 minutes from now from the Bank of England. I'm sure that you have already been informed about the Fed. It was a massive. We have seen some massive moves yesterday, and that has to do mainly with Mr. Powell. Okay, that was the thing. It was Mr. Powell. So the fact that even though the Fed delivered as it was expected, 50 points of rate hike, however, Powell, in contrast with the rest of the Fed, it sounded more hawk, more dovish. So what he did is, like, he clarified it that he's not really a fan of the 75 points rate hike in June. He stated that it might be up to 50 points, and also he sounded very, very dovish. He was pushing back in general the tightening action for the rest of the year, and that is what actually driving dollar low. Even though we have seen the dollar recover some losses today, but yeah, over here I have pound, I have cable. As I said, because we have the Bank of England, it's all about Bank of England today. So Bank of England in 2 minutes is expected to lift the policy rate by 25 points to 1% today. In general, the Bank of England is ahead of the ECB on policy normalization. And the last comments that we have, so from Governor Bailey, from the members of Bank of England, we have seen that they stressed that after three rate hikes, they might walking in a very tight line, um, in regards to the economy, and this is quite logical if we consider the energy stock, the energy shock, the escalating price pressure, and the output effects of the real income shock. So yeah, in less than a minute, this is what we're expecting to see. Actually, the press conference is in. It will be out soon. The Mr. Bailey will speak in 30 minutes. So hopefully during our live we'll manage to see his comments as well. But yeah. Okay, the results are already out. Let me share them with you. Come on, come on, come on. Here we are. So 900, what a voting rate hike. So nine members, all members actually, together they vote for a rate hike. None is really, and they did the expected. They increased by 25 points to 1%. Okay, that was really as expected, but I wasn't really expecting this voting split. I wasn't expecting that would be a common decision, and this is what it is: 9-0. Nine members of the parliament vote for rate hike, so further tightening, and none was against it or unchanged. So that's the big deal over here, because the 1% rate decision, it was expected. This is something that it wasn't expected. So now what comes next, and what the important, I mean, even more important than the interest rate, it will be Mr. Bailey, to be honest, because we want hints. We want to find out what will happen from now onwards. What are they thinking from now onwards? Okay, I'm gonna put the 30 minutes chart. Okay, I can see a lot of comments. Okay, I'm gonna go through the markets, guys. Don't worry. Obviously, we need to leave sterling to calm down a bit, but okay. Okay, so I'm good. Thank you. How my the pound go if they raise interest rate? Okay, Ninja. The interest rates were expected to rise. Okay, it was something that that has been fully priced in, so that it was a done deal. That's why maybe if I just put so you can see that it spiked on the announcement, but it was fully pricing. That's not really the case. What's the case is the voting, and what Mr. Bailey will say next. Remember what happened yesterday on the Fed. They didn't expect it, but as soon as Powell started speaking, and he pretty much came in contrast with what we all expected, right? Remember that the markets were expecting 150 points rate hike for the year. We were expecting 75 points for June, another 50 points for July, and etc. But Mr. Powell came on. He was on his feet, sorry, and he declined on this. He was like, "No, I'm opposed on more aggressive stance. I don't not 75 points for June, maybe 50." So he came against expectations. That's why even today, the attention was on the rates and the voting. We might see similar volatility to this one on when Mr. Bailey will speak. So this is a 15 minutes chart, just to clarify. This is a 15 minutes chart, okay? 15 minutes chart for pound cable. So we have seen that on the announcement, cable tried to push higher, retesting this previous high at 125.75, and now it's turning down, okay? It's turning down. Um, And you can say that, Andrea, this looks a bit bizarre, right? Why? The interest rate hike supposed to reflect to an expensive cable, to a boost of pound, but instead we're seeing a reversal. This might be on the anticipation of the governor. So don't let's wait a bit until ballet's out. That's the crucial. The press conference is something more important than an interest rate decision. Obviously, if we're gonna see an interest rate that is like double of what was expected, obviously we're gonna see a reaction in the market. But yeah, the upcoming outlook that Bale is expected to state in his statement is more important. So for the time being, we are seeing cable drifting lower, okay, drifting lower. So it's getting back, okay. Okay, let me zoom out a bit. Let's get to the 30 minutes chart. So you see all the gains that we have seen from yesterday afternoon, they have nearly returned back. So it's back below 125, and there is a lot of selling pressure. It seems that um, that um, on the announcement, we have the sellers, the bears took the control. Give me a second just to scan a bit to see, other than the voting that came 9-0 from 8-1 that was expected, whether we have anything else coming, or whether the statement has um, sorry for that. I forgot to mute my phone. So yeah, other than the voting, whether there is any further breakdown, but apparently, some it seems that some degree of further tightening monetary may still be appropriate in coming months. Okay. Thank you. Thank you. I would like to thank my colleague for muting my mobile phone. Okay. The statement is out. Okay, let me quickly scan through the statement because it seems that this selling is due to the statement. So apparently, okay, the statement is out already ahead of ballet. Let me scan through it a bit, guys. So, give me a second. So according to the statement, there will be further tightening in the upcoming months, but some degree. This is what it's mentioned in the statement. So some degree means that they will not be as aggressive as they have been so far. So a bit of more neutral tightening. Two of the members judged rate guidance as inappropriate, considering risk to growth, inflation are more balanced. Also, we will consider starting process of selling UK government bonds now that the bank rate is at 1%. And also, that's key. I will put it on our headlines just to have a look at it, guys. Okay, because I know that I'm speaking, you I might not be clear. So I don't know whether you can see my comment, but Bank of England forecast in her statement that UK will slide into recession. I think that statement is what is causing this falling of cable, this drift. Bearish crossing the 15 minutes chart, extending Bollinger to the downside. The next floor is really at yesterday's lows, 124 or even 124.50 to be more precise. Everything is turning lower. MACD is extending lower. Stochastic already crossed lower. I mean, an hour and a half ago already. RSI turned ready to cross the oversold territory. So a big selling. Apparently, this is the statement. Okay, and the statement. Remember, Bank of Mr. Ballet will read the statement. That's why. So this is what's going on. Big selling pressure. Cable actually pound in a sell-off due to the statement. And if I have further news, if I have further comments, I will let you know about the statement. But yeah, That is what causing a big drift of sterling. So you can largely see that the market has largely ignored the rate hike and the voting, but they have focused on the statement, and the statement clearly said that okay, there will be some tightening, some degree tightening. So that's not so strong statement, but they said that they are forecasting that UK economy will slide into recession. This is what causing the sterling sell-off. Now I can see your comments. How am I going to go? Okay, guys. Okay, dear. A ninja, wise ninja. This is a 30 minutes chart. We have seen the sell off. Let's go to the 1 hour chart just to see how that goes. So you can see a resumption of the drift that we have seen since this morning of the European Open. So a resumption, a continuation of the sell off. So in this 1 hour chart, big hourly candle obviously is a new candle, so it has a, we haven't really seen how that ends, but the next floor is at 124.50. A breakout of that level could open the doors further to the downside, and that means back to Friday's lows. And if I put the daily chart, because I need to find the floor, I won't be able. So let me just, you can see what that overall anyway, pound cable overall in the long term, it has been to the downside since last year. So since the beginning of last year, so 1 year and a half. So, and we have continuous decline this year. This is the weekly chart, right? We have two consecutive strong bearish candle the last 2 weeks, and we have seen a continuation of this pattern. So outlook hasn't really changed. Okay, what's changed? What changes? Which one to identify the next support level? So the next support level intraday is at 124.50. If that breaks, then further decline could be seen at 124 level, which is, let me just draw it for you. So here it is. Let me just draw everything. So if intraday next support, as I said, at okay, next support at yesterday's lows 124.50. If that breaks, then it will bring into our attention the round 124 level. Okay, and just to have in mind tomorrow and for the day, for the week ahead, if 124 level breaks, let me just clear this mess a bit because it's too many lines, and I want you to have an overall view of the cable. So here's my Fibonacci's for the since 2020 from the pandemic. Can you see how important this level is? Can you see that it has already broken? This is a 61.8 Fibonacci levels for the last 2 years. So the cable has managed to return more than 60% of the gains that we have seen since the 2020. So you can understand how important is if the asset continues falling below that level. That will bring into attention the lows that we have seen 2 years ago. Okay, but okay, that's in the long term. As I mentioned, 124.50 the next intraday support. If that breaks, then 124 is a key round number, so we might see some kind of if he managed to breach that level, we might see some support. And now for the week ahead, what you should have in mind is that if the cable fails to break 124, then our next important support area will be over here. Okay, between 122.50 and 120. That's a massive, that's in the long term. Okay, that's in the long term, just highlighting. I don't want highlighting that, I don't want you to get confused. So massive sell-off so far. If there's anything that you want to that you want me to state again, just let me know. Obviously, this question has been replied already. It's a massive move. Oh, okay, I'm gonna put the 30 minutes candle because this hasn't ended yet, but it has breached already the yesterday's low. So sorry, yes, yesterday's double fractal over here. You see, has already breached that level. So I have replied to your already there. Hello, Sanil, sorry, Kumar. Uh, it doesn't sound like good news. Actually, the rate hike it was good, but it was quickly ignored as soon as the statement came out stating that UK might enter into recession. So that's actually something that we're expecting from ECB as well. I mean, it's not only the UK economy that's expected to slide into recession, it's also the European economy. It's not solely the COVID situation, it's the impact of the energy shock on the energy situation. So further slowdown is expected. Inflation could rise in UK as high as 10% according to Bank of England. So this these recession comments, the increase in inflation has managed to add further on the pound and has managed to um, to s- to bring further fear to the market participants in regards to the US economy, to the UK economy. Okay, this is what is. So a continuation, a confirmation of the bad situation that the UK economy is facing, and adding to these fears, adding to these concerns. So the overall outlook was anyway negative. So today's statement has confirmed, unfortunately, this negative scenario for cable. So let's move on to a different. Shoot up. Okay. Okay, let's shift a different to a different asset class. Dow Jones and Nasdaq, of course. Let's start with Nasdaq. A big boost has been seen in stocks yesterday on Mr. Powell comments. This is a daily chart for. Oh, sorry, that's FTSE. My bad. Here's Nasdaq. So this is a daily chart, my dear Emma. So we have seen a big boost yesterday on the comments from Mr. Powell. However, the asset hasn't managed to. Okay, here we are. Hasn't managed to break and to move above the 20-day moving average, and that's quite correct. Why is that? Regardless of how dovish Mr. Powell was, he still said that we're gonna hike another 50 points for June, right? He ignored the 75, but he said that we're gonna continue tightening, but not as aggressive as um, as the 75 points. But he confirmed the 50 points. Okay, so it's not that something is changing from the U.S. economy. Okay, they will continue the tightening. That's why that might be a reason why, as you can see, Nasdaq over here failed to break the the to breach actually 34,000 level, and instead it was consolidating and then turned slightly lower, consolidating again. So for the time being, for today, it's in a small slight pullback, not a sustainable one. Okay, it hasn't returned back. So what we can see over here is a bit of a consolidation, uncertainty. So what happens in this case is just we are adding our trend lines at the top and the bottom of the day's high and low. So what will clear this situation over here, this picture, is either a um, further continuation of the southwards move, okay, or a rebound and a decisive break more precisely of our 20-day moving average at 13,640. Okay. But if we consider the fundamentals, the stocks should continue being under pressure considering the tightening of the Fed. Okay. Now, intraday, because I guess Emma is interested in an intraday basis. Here is the upper and lower trend line, so our immediate support and the resistance area, our immediate one. I mean, 1 hour chart, so this is intraday only. And I will add also my Fibonacci levels. Okay. Here is that. It's not perfect, but okay, so you can see that it came down to 23.65% Fibonacci. Remember, 23.6 is not an important Fibonacci level. It's not an important retracement level. So as long as we don't see a move at 38.2, that means that the reversal is not the case yet. Okay, reversal down to 12,000 area I'm referring to. So the asset has sustained, has found some kind of a floor over here. So we have a very neutral sideways movement, my dear Emma, unfortunately. Consolidation is the case right now. You can see how small body these candles are. So there's no indication, neither a bullish or a bearish one. So okay, and you can see MACD started declining, RSI just crossed 20, but the slope is not strong, so it's not like a sharp slope to the upside in order to believe that it will get back to the highs again, or it could extend further higher. So it's a very mixed. We have many mixed indications over here, so we need to be a bit on the wait and see stance for USA 100 over here, at least for now. You mentioned also Dow Jones. Let me check Dow Jones as well. Don't forget it's an earnings season still, right? So we need to keep ourselves up to date with this with the earnings as well. So as USA 30, where is my Dow Jones? Here it is. Should be something similar. And it is indeed a small pullback, but still sustaining the highs that we have seen for the last 2 weeks. Failed to break the 20-day moving average, so the outlook hasn't really changed yet. It remains for 2 weeks in a row, more than 2 weeks, 9 days in a row in a sideways movement, okay, in the low territory of 2022. Okay, so a small pullback, but not a significant one. So yeah, it is what it is, I'm afraid. We need to see, it's still in a neutral zone. So nothing really helpful, I'm afraid, Emma. The present status of Forex. Okay, what we have, dollar recovery from yesterday's losses, right? Actually, I'm gonna show you the traders board. I think is useful. Let me find the traders board in our website. Let me share it with you. Um, come on, come on, come on. Give me a second. Come on. Sorry, it's a bit. Come on. Traders board tools. Where's my traders board? Traders board, here it is. Let me share it with you guys just to see the current condition. This is, I guess, this is what Hussein is asking. Yeah, Here we are. I think you can see it. So what we have, sterling under a massive sell-off against all the majors. We have a strong dollar, so dollar recovering. Okay. We have, however, um, mixed conditions in the rest of the country. So the biggest gainer today is dollar. The biggest loser is pound. Okay. Um, Euro gained some losses. Actually, is gaining against all the currencies except the Canadian dollar and US dollar. And the same thing stands for Aussie, Kiwi, Yen, Swiss. And what I'm referring to is that they are gaining only against pound. They are weak against all the other currencies. So this is the current stance. This is the current condition in the market. So let me get back and sharing my MT4. You can see this massive rally that we have seen the last 24 minutes of dollar. So you can see that it resumed. So it was like waiting, consolidating, dodgy candle, sideways movement, some weird candles over here. This is not dodgy. It's not. It doesn't even have a body. So this is what we had in the European Open until the Bank of England is out, and we have a big boost. And here is the dollar index, and um, recovering. That should be more than 70% of yesterday's losses. Let me just have a look. Yeah, more than 60%. More than 60%. So it will be crucial to see whether they will enter the high territory, the high area that we have seen the last 5 days. Actually, from fundamental perspective, this is what will happen. I mean, I said Fed is still on a tightening, aggressive tightening. So dollar is expected to return to this area or even extend it further to the upside. Okay, considering also the big differentiation that we have with the rest of the central banks. Okay, so yeah, dollar back on beat, big massive rally the last 26 minutes, entering the upper Bollinger Band area in the 1 hour chart, breaking the 50 period moving average as well. Fast moving averages are pointing higher. Yeah, so bullish cross of the stochastic over here. Recovery of RSI and a break above 50. So the next level to be the next resistance area is coming over here at the upper Bollinger 103.50 level, which is also coincides with our latest up fractal. So 103.50 is the next resistance area intraday for the dollar. Now, gold, of course. Gold has seen some boost yesterday from the Fed, but it quickly returned back lower, and this is what we have over here. And okay, here we are. So that was a okay. Let me zoom. This is 1 hour chart. Okay, let me just okay 1 hour chart. We have seen that it spiked to 1903 temporarily, at least, on the Fed. Quickly turned down today on the European Open, on the Asia Open, the European Open. So quickly turned down. However, it sustained, it gained so far. So here we are. Sustain a move close to 1900. So it's pretty much consolidating, I'm afraid. I'm afraid, dear Hassan. But okay, consolidating intraday. But let me just okay. Let me just show you something. Okay. Consolidating intraday, so you should have so the support is at 1903. Sorry, resistance at 1903. Support is at 1889. So Either a break above that level or a move below 1889 will reflect to a bullish or a bearish move for gold respectively. Okay, but nonetheless, it goes up. You can see this is the 4 hour chart. Okay, you can see continuous lower highs, continuous lower lows of gold, and this is because it's an inflation hedge asset, right? Inflation hedge asset. So the outlook for gold hasn't changed. Overall, it's still a negative outlook considering the interest rates and etc. Interest rate decision and etc. So um, it has a negative correlation with the interest rates. We have seen a peak ahead of the Fed, but now, from a technical perspective, at least we're waiting to see whether it will turn back lower once the situation, the volatility eased a bit. Um, so uh, there's something else that I wanted to mention in regards to the gold, but yeah, got a bit. So what else? So yeah, intraday remains sideways, but on the long term and the medium term outlook is at years lows, well above its 20-day moving average. Um, so momentum is still negative. Okay, you can see my RSI over here. Ignore stochastic for now because this is my indicator that I'm using for 1 hour chart. So ignoring the daily chart. But look at that. Look at RSI. RSI has formed a descending triangle. The RSI tried to recover and is pointing upwards yet, but as long as I don't see breaking my trend line, then the outlook remains negative. Is it clear? So you need to see. Okay. You need to see the asset. Okay, I'm gonna put also my Fibonacci's because I love them. You need to see a move at 1930 area in order to imply that the gold will return back to years territory to the even to 2000. But from fundamental perspective, due to the tightening, this looks unlikely. Okay, so that looks a um, like a correction. These 1, 2, 3 consecutive bullish days look like a correction before another move to the further to the downside. Okay, overall the outlook remains negative. Intraday still sideways, so we need to keep an eye on these two levels. Okay, is everything clear? If nothing is not, let me know. Uh, yeah, we have said that. If you have anything, any question, let me know. Miley. What are the indicators of your chart? Okay, over here I have too much to be honest, which I shouldn't. But what I'm using intraday is my fast moving averages, so 5 and 9 exponential moving average along with my Bollingers, and stochastic MACD RSI. Stochastic is only for my intraday analysis, so 1 hour and 30 minutes chart. So that's why the settings is 533. Now in my daily chart, let me just change my template and put in the daily chart. My daily chart, okay, here it is. My daily chart has only Bollinger's 50 and 200 moving average, simple moving average, MACD and RSI. Okay. Okay, it's printing a reversal candle this week because last week one rejected that level. From next week we might start shooting up. Are you referring to cable EduFX? Are you referring to cable? So let's see. It's printing a reversal candle this week. Yes, it looks like if we consider the daily chart, oh my god, that's a massive sell-off. That's a massive sell-off. It has turned back 2 weeks lows, extending Oh my God. Let me put the 1 hour chart. Yeah, that's a massive candle. So it will be key to see how cable will close this week, because if it extends below that territory, that would be a free fall. Free fall. Literally. Literally. Yeah, okay. I have covered gold. Covered gold. Let me know if you still need gold, because I've just covered. Um, so I guess I replied to your questions. Guys, I'm here to help, by the way. You don't have any further assets that you want me to cover? No? By the way, Bailey is on. Let's see what he is talking about, because I think he already started speaking. Yes, he did 4 minutes ago. Let's see whether I can find any comments, any of his comments. No, we don't have any of his comments yet out. But definitely, what is responsible for this sterling drift is what I mentioned earlier: the dire outlook um, on on UK economy. The fact that Bank of England clearly said that UK economy is into a recession. That's massive. That's massive for a bank to say about this economy. Let me try to find um, any comments from Bali. HSBC just revised euro dollar year end forecast to parity. Oh, Jesus mio. So euro dollar dips further to the downside. Yeah, no one asked about euro dollar. Is in a big sell off, turning back to where it's supposed to the 105 level. So remember, guys, UK economy, the European economy are the ones that they have been massively impacted. They have expected to be massively impacted by the situation in the Ukrainian war. So the fact that Bank of England stated that they were getting into recession, it impacts euro, because that the same means for euro as well. The same stands for European economy as well. They might have exit European economy, but they are still affected by the same stuff. So euro reversal down again. Um, Massive decline over here. Let me zoom out a bit. It should be at halfway of yesterday's gains. No, not even halfway. Already return more than 60% of yesterday's losses. MACD turned negative. RSI in a sharp sell-off. Stochastic in a sharp decline. RSI close to oversold territory. And the euro in general cannot be supported by fundamental. The euro is in a negative outlook from fundamental and technical perspective as well. So the fact that it has broken first of all, it has broken this latest peak that we have on Monday, is extended outside its Bollingers. Can you see that? Extended outside its Bollingers, is below the 50 and 20 moving average. Let me put also my intraday setup. Where's my intraday setup? Oh, sorry, wrong template. Here it is, my intraday setup. Fast MA is extending lower. So yeah, that is implying to uh, an increasing negative momentum intraday for euro. Okay, um, so euro has already faced overall. So this is a daily chart. Euro has been to the downside since April 2021. Okay, so it's, as I said, neither the fundamentals, neither the technical support the euro. Um, so euro has faced more downwards pressure than we expect today. Uh, um, sorry. Um, um, it's and the comments from HSBC that they have revised euro dollar year end forecasting to parity. It's something that will unfortunately, I will put that on just for you to see. It was an announcement. Actually, it should be right now from HSBC. Euro dollar year-end forecast to parity. That is something that will that has added further pressure on euro, other than the strong dollar, of course. Guys, before I call it a day, any other questions? None. You were only interested in cable and gold. Nothing else. Let me check whether there are any comments from Bailey. Govern on Bailey. Not yet. No. I will finish with oil. No one asked about oil, but I will. Let's check together oil because we had a big boost yesterday, trying to actually retesting the month's highs. So back not to 109. It hasn't managed to breach the 109, but is really close to it. The 109.70 remains a key resistance level for oil. It's up fractal the daily chart. It's our upper Bollinger Band area as well, so it's a key resistance area. But we have OPEC today as well, so this is a daily chart once again for oil. And we have all OPEC today, which agreed to stick with existing oil output policy. So apparently OPEC doesn't really want to change anything. They are sticking to increase oil output by 432 barrels in June. So, okay, still not over. I mean, this is just reports that we have from Reuters. There is no confirmation yet. The meeting hasn't over yet, but I'm not really. I don't believe that they will change anything or increase the output and etc. They are benefited from the high prices, so I guess they will keep the existing policy. And if they do that, then that means further support for oil. So keep an eye on this key resistance level at 109.70. Support lies at 10. Here it is. Okay. 102.60 is the halfway of our channel, is the 20-period moving average. That's in the daily chart, so medium outlook. Intraday 109 key resistance level, round number, and immediate support is at, come on, 107.23. So a decisive break of 109 could open the doors to another 70 pips higher, and the high territory that I mentioned, the 109.70 territory, right? If that breaks as well, then our attention will turn into March 2020 highs. Now, a flip intraday below 107, more precisely, a confirmed breakout of the round 107 level. So that means, let me just put it right. Let's be precise. Okay, round 107. As I said, a breach and a breakout below that level could brings back into our attention. Here it is. It will imply to the next support levels at the Fibonacci level, so 105.70 and 104.67. But that looks a bit, no, it's too far away. This is the latest rally. My mistake, guys. So here are the immediate support levels if 107 breaks. Okay, so 106.40, 105.50. Okay, but as I said, if OPEC sticks to existing oil output, that could provide some support, further support to oil, to be more precise. New Zealand, yeah, sure. So New Zealand dollar is in a bit anyway. So big sell-off as well in Kiwi. So well, that looks okay. Market turn negative. The stochastic still pointing downwards, so there is further steam to the downside. There is further selling pressure. So the next 61. So the six. Okay, the next important support level for Kiwi, my dear Masood, is the 61% Fibonacci level from the latest rally. So that means at no point. Let me be precise for you. Next support level is at 0.6475. This is the next support, immediate support for Kiwi. Or also coincides with my latest up fractal. A break below that level could open the doors to not 6460. Okay, this could provide a nice floor for Kiwi. Now, if you're referring to the medium outlook, my dear Mashud, that that boost yesterday looks like a bit of a correction, okay, on this decline, the decline that we have seen, this sharp decline that we have seen for 2 months now. So the overall outlook for Kiwi remains negative. Of course, the continuation of the decline will be confirmed if the asset. So let me clear a bit the intraday material. So the confirmation of this, the continuation of this decline could confirm if the asset if the daily candle closes today halfway of this daily candle. So halfway means, let me zoom in a bit. Halfway means actually red at 64.90. So this is so you need to find the mid of this candle, of yesterday's candles. If tonight the asset close below the midpoint of this candle, of yesterday's candle, then this could be a sign that this decline will continue. Okay, in the medium term. This is a daily chart. Last but not least, okay, another question, Bitcoin. Of course, even though the specialist in pink Bitcoin is not me, is our annual analyst Kadir. So, okay, Bitcoin, it was in a key resistance area yesterday, failed to break it though, 40,000. You can see it's breached 40,000, but we have seen a bit of a pullback yesterday. But what is quite important about the pullback that we have seen today is not significant. A lot of sideways movement has been seen since it breached that level. A lot of doji candles, small body candles, and this implies that there is not a reversal signal yet for Bitcoin. So I don't have much to say, my dear Mohammed, for Bitcoin right now, intraday at least, because it's consolidating. But the fact that we have so many doji candles, but sustaining the high territory that we have seen so far this week, it question marks whether it will get back down again. Actually strengthens more the bullish outlook. But we need confirmation. We need to wait and see, because still the asset remains below the 20-day moving average. So we need to be a bit patient with Bitcoin in the medium outlook at least. So we need to see it turn into the upper Bollinger Band area, something that we haven't seen yet. Intraday now, yeah, keep an eye on the low, on the 39,389, which is the low of the day, and to the 40,000, which is the high of the day. Even though the momentum is not strong, is very, very, very weak. So it's something that we should just keep an eye on until we see something significant, until we see that a massive sharp decline, a sharp hourly candle lower, or a sharp rebound and strong. We need to see a big body candle in order to take any decision in regards to Bitcoin. What is certain so far is that managed to sustain the highs that we have seen this week. The momentum remains positive in the intraday basis. We see stochastic turning positive again. But yeah, we need further signs because there is nothing yet. Yeah, so that's pretty much it. If there are no further questions, I will call it a date. So just keep in mind that okay, we have some comments from Ballet. He's saying that risk to inflation are skewed to the upside. So pretty much highlighting that risks are for the inflation are getting bigger and bigger and bigger. No decision made on whether to have active sales of government bonds held by the Bank of England. Bank of England do not meet technical definition of a recession, but it is in a very sharp slowdown. So he's very dovish, very, very dovish, clearly stating the risk of recession. So yeah, as dovish and as pessimist as the statement was. So that could add further pressure on pound in the upcoming days or even weeks. So that's a massive decline, guys. This is the hourly chart, massive decline. So in an hour, think about it, in an hour, it managed to get back and break the low, the recent low that we have seen in 28th of April. So in an hour, we have seen a move of around, come on, 184 pips in just an hour. That's a massive decline. That's a massive decline. Already cross and break last week's lows. So extending losses. Okay. So thank you very much for attending. I can see that there are no further questions, so I will call it a date. Thank you very much for attending. Have a great day ahead, and don't forget tomorrow is NFP, so it's a massive week full of volatility. So NFP tomorrow, I'm gonna have another Facebook and YouTube live, so join me. And yeah, take care until then. A lot of volatility in the market and a lot of a busy calendar, a lot of headlines, a lot of reports that are affecting and impacting the market. So a lot of politics as well. Keep an eye, keep yourself up to date with the news, and I'm gonna see you again tomorrow on the NFP release. Thank you very much. Have a great day ahead. Bye bye.